Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the derivative patterns, the candlestick patterns on the different asset classes. Now, first of all, the general disclaimer: this video is just for an education purpose. Viewers should consult your financial advisor before investing. Now, first of all, let us discuss what we have mentioned in our last video. In our last video, we mentioned that markets are slowly and gradually inching towards its lifetime high, and whenever the prices tries to uh, test its lifetime high or all-time high, there is lot of a struggle between the bulls and the bears, and that's what we have seen in the last week. Uh, we have been mentioning that buy on dips should be the strategy, and for the current week, I mean to say for the last week, we have mentioned that the target for the Nifty was 18,888, and almost Nifty tested 18,864, 68 odd levels, and just it was just 20 points short. But sooner rather than later, maybe next week on Monday, we will see Nifty crossing in lifetime high. Now, whenever this kind of breakout we see on specifically on the indices, it has a very huge impact and a positive impact on the markets. So once it sustains above those particular levels, that is to be precise 18,888, and if it sustains maybe 10, 15 days, 30 days above those levels, then after that particular breakout, there are chances that maybe next couple of months, maybe till August or September, we will see maybe 5 to 6% of uprise from the breakout point in the Nifty as well as in the Bank Nifty. So maybe almost we might see if there is a if we expect or if we see a 5% rise, then it could be almost 800 to 800 to 1,000 point rally in Nifty, maybe from current month till maybe in August to September. This should be a 5% rally from the breakout point. So breakout point may be around say almost 18,888. So maybe most precisely or most expected target would be 19,500 to 19,600, 100 point, 200 points here and there. So this is how the price behaves when there is a multiple year breakout or a lifetime high breakout or a long consolidation breakout. So markets are poised to rally from these levels, and at least I don't see a major correction from these levels, at least till August or September. Yes, we might see 100, 200 points, 300 points correction in the Nifty, but those could be just considered as a profit booking. So overall, looking at the expected price pattern, we feel that the prices are strong. Even the global markets are supporting, and all the negative news are being factored into the markets. And markets have you might have seen that market has closed first time to the highest level in the recent past. So definitely this is a good sign. So friends, now let us check out the daily charts of the Nifty, and we'll try to figure out what could be the trend for the next week from the current levels. So let us check out the Nifty daily charts. This is the Nifty daily charts. You can see here. Now in Nifty daily charts, you can clearly see it has been moving into an upward rising channel, making higher tops, higher bottoms, and currently it has just taken a support. Let me stretch the chart so you will have a clear view. You can see this particular support in Nifty. It has exactly taken the support near the support trend line of the rising channel. It is poised for an upside rally from the current levels. The charts are getting sharper and sharper day by day, and the primary trend is also positive. Now let me just show you. This was the lifetime high uh, registered on maybe around 1st December 2022, and after maybe a huge time, huge long consolidation, it has seen a valley. You can see this valley and then a breakout. So definitely, if even if we take this if this valley as a target, so almost we might see a rally of 2,000 points from the breakout point. See, the high was 18,888, which was registered on 1st December 2022. The low, which was registered on 20th March 2023, was almost 16,828. So almost you can consider it a 2,000 point of fall. Now again that 2,000 point fall has been recovered and it is at the breakout point. So just logical simple if we put on our analysis, a simple technical analysis, just add on 2,000 points from the breakout level. The breakout level is 18,888. Just add 2,000 points, which comes to around almost 20,800 mark. So I'm not saying that 20,800 will come in the next 6 to 8 months. Maybe it will take maybe 2 years or 2.5 years, maybe 18 to 24 months. But most precisely, this could be the target for long term. Now, if we see this particular rising channel, the rising channel pattern is almost just coming around say 19,500. You can see the cursor or the rising channel upward resistance is just almost around 19,500. So what we have discussed that whenever there is a breakout of lifetime high, at least we might see 5 to 6% of rally from the breakout point. So almost it is coming around 19,500 to 19,600. So yes, definitely the price is strong. Any dips should be used as a buying opportunity, purely looking at this charts. So now friends, let us discuss the important supports and resistance level in Nifty for the next week. So friends, the first support in the Nifty is placed at 18,710 is the first support. Then below that, the second support is at 18,555. And third support is placed at 18,464. Now, whereas on the upside, the first resistance is placed at 18,900. Above that, the second resistance is at 19,000, which is a psychological mark. And above that, the third resistance is at 19,125. So these are the important supports and resistance level. The primary trend is positive. Traders should just try to watch out these levels and trade in the direction of the primary trend. So any dips should be used as a buying opportunity, looking at the candlestick pattern. Now, friends, let us discuss what we have observed in derivative data. So we'll see on the screen Nifty calls data. In Nifty calls, the action was seen in 18,900 calls, 19,000 calls, 19,100 calls, and 19,200 calls. Now here you can see there has been rise in the option premium, rise in the volumes, open interest is also rising, implied volatility is low, it is between 7.65 to 8.10. So it is clearly indicating that the trend is bullish. Smart money has already entered long. On immediate basis, you can clearly see looking at the open interest, change in the open interest and volume. 19,000, which is the psychological mark, could act as an immediate resistance because it is a psychological mark. Once Nifty closes above those levels, then there are chances that Nifty might cross or test the levels of 19,200 in the next week. So at least on immediate basis, we will see 19,000 as a major barrier. If it breaks, then the upside is visible towards the level of 19,200. So looking at this data is positive. Any dips should be used as a buying opportunity, and looking at this data, 19,000 could act as an immediate barrier. Now friends, let us discuss what we have observed in Nifty puts. In Nifty puts, the action was seen in 18,800 puts, 18,700, 18,600 and 18,500 puts. Now here you can clearly see there has been a significant drop in option premium. There has been a rise in the volumes, rise in the open interest, implied volatility is slightly rising between 8.8 to 10.35. Now here you can clearly see the smart money has already into writing out of the money puts. Now whenever the smart money writes the out of the money puts, it's clearly indicate that they are bullish on the markets and we don't see any major correction from these levels. Yes, some cool off cannot be ruled out. So looking at this particular data, 18,800 is the immediate support. If it breaks, then most precisely it can drift down to the 18,700 marks, where there is a strong concentration of open interest as well as the volumes. So if Nifty cools down towards the level of 18,700, that should be a buying opportunity from these levels, or even between 18,750 to 18,700. That should be the area where one should try to buy at the lower levels. So most probably The candlestick of Nifty and derivative data is showing strength as of now. So at these levels, any dips should be used as a buying opportunity. Now, friends, let us check out the Bank Nifty charts. In Bank Nifty charts, daily charts, you will see that Bank Nifty has struggled last week, and during the fag uh, end of the week, that is on Friday, we have seen Bank Nifty has formed a kind of inside day candle, or you can also consider it as a bullish harami candle, which is termed in Japanese candlestick theory. So this is a bullish formation. So on immediate basis, Thursday's high, which is 44,077 on the spot level, could act as an immediate resistance. So traders, those who want to take a swing trading, that means those who want to take a directional call going long in Bank Nifty, should wait for Bank Nifty to cross 44,077 spot mark and then try to build long position above that only. Because if once it crosses, then we might see a sharp short covering in Bank Nifty from those levels. So at this juncture, the trend is bullish. It is an inside day candle. It is bullish harami pattern at these levels. So one should stay bullish in Bank Nifty also. So most probably Bank Nifty has our chances that Bank Nifty might test the level of 44,500 on immediate basis, which is the lifetime high. And if it crosses those levels, then most probably it can test the levels of maybe 45,000 in couple of days. So now, friends, let us check out the important support and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 43,768. Below that, the second support is placed at 43,397. And third support is placed at 43,074. Whereas on the upside, the first resistance is placed at 44,077, which I said that this could be an immediate resistance. Above that, the second resistance is at 44,452, and above that, the third resistance is around 44,720. These are the important supports and resistance level in Bank Nifty. Traders should closely follow these levels. The primary trend is positive. Any dips should be used as a buying opportunity, or this is for the conservative trader. Those who want to trade above the breakout should look out for Bank Nifty to break the level of 44,077 and then try to build long positions for the target of 44,500, 44,600 at least for the next week. So friends, now let us check out the derivative data of Bank Nifty. You will see on the screen the Bank Nifty call data. In Bank Nifty call, the action was seen in 44,000 calls, then 44,500 calls, and 45,000 calls. Now here you can see there has been a rise in the open interest, there has been a rise in the volumes, there has been rise in the option premiums, at least till 44,500 and 44,600. So most probably the data seems to be positive. Implied volatility is also in comfort zone between 8.86 and 10.45. So immediate basis, 44,000 could act as a major resistance looking at this data, and candlestick patterns resistance level is 44,077. So above these levels, then there are chances that Bank Nifty can test the levels of 44,500. And if it crosses those levels, then 45,000 is reachable maybe in couple of days. So friends, now let us see what we have observed in Bank Nifty puts. In Bank Nifty puts, the action was seen in 44,300 puts, 43,800 puts, then 43,500 puts, and 43,000 puts. Now here also you can see volumes are rising, open interest is rising, but there has been a significant drop in the option premium. This is clearly indicating that smart money is into writing the out of the money Bank Nifty puts. They have strongly written the out of the money puts. That means the trend is very bullish, and we might see surprisingly sharp short covering from those levels, from the breakout points. So looking at this particular data specifically, I just want to highlight that those who are short in Bank Nifty or in Nifty also should try to exit short positions, because once it crosses 44,077, then we might see a very sharp short covering towards the levels of 44,500 to 44,700 at least in the next week. So one needs to be very cautious, those who are short. Any dips should be used as a buying opportunity. Now at these levels, 43,800 could act as an immediate support. So that should be the area where one should try to build long positions for a swing rally on the upside. So friends, now let us discuss the positional call. I've identified one stock. The name of the stock is IRCTC. Now you can see on the screen, the stock has already consolidated for a long period of time. The consolidation period started from December 22 and it has given a breakout in almost July 2023. Now you can consider this as an inverse head and shoulder breakout. Now here you can see at breakout there has been consolidation of volume as well as the rise of the volume. Now whenever such kind of breakout happens, then it could be termed as a reversal pattern. Supported with price volume action. Indicator is also positive. Now the stock has given an inverse head and shoulder breakout on the daily chart, supported with strong volumes. It is sustained and closed above its neckline. Now the stock is poised for an upside rally at least for next 3 to 4 months. So the investors, the swing traders, the short-term investors, the long-term investors can accumulate the stock maybe from current levels, even if there is some kind of dips, that should be used as a buying opportunity. The current market price of the stock is around 666. So short-term investors, positional traders, swing traders can accumulate the stock in the range of 666 and on corrections to 650 for an upside target of 730 in short to medium term. Now, short to medium term means maybe for maybe 3 to 4 months. So, looking at this particular price volume action, it is a reversal pattern which is inverse head and shoulder breakout. The stock has sustained and closed above the neckline, supported with strong volumes. So these are very good indicators that stock might see a decent rally from the current levels. So again, this stock should be there in at least for short to medium term investment portfolio. So friends, let us conclude the show. Thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.